Let's see if this recording works. And what I've been doing at the moment, because we're range bound, I've been using the fibs a little less recently because we're just stuck in ranges. And you can see I've just got, this Dow's a little bit messy the way I've marked it up, but nonetheless, I've just, as you can see from this dotted line on the RSI, I've just been very focused on where the support and resistance is. And you can see this nice little neat channel that has been created on this Dow. At one stage I was short this Dow, but I realized that these levels were holding despite the extreme RSI and the resistance. We did make a newer high in the 60 minutes, and the volume seemed to be too weak, so I took it off for a small profit and left it. But yeah, and we've gapped up. The other thing I was conscious of, one of the main reasons why I was shorting it is because we got this gap.
Yeah.
So that's where we were on Friday. That's not the close on Friday. Let's put it on the close. That's where we appear to. We closed at 317, and then we opened at 363. So I was, with all this extreme RSI up here and some red bars up here, I thought we might at least go and touch the Sunday open, if not go and close the gap. But we've got no visible evidence that we're in line for that at all at the moment. It's non-farm payroll on Friday. In actual fact, we're quite a busy week for data. Let's have a look at the schedule. There's quite a lot going on, so the markets don't seem to be directional, apart from that spurt at the open. So today we've had German retail sales was good. UK lending, the money supply was good. So, I mean, on the whole, the data from the UK is pretty solid, and we'll come to that. The data from the US has been pretty good. So the main theme to the market at the moment is obviously the fear with what's happening in Eastern Europe and the potential impact of China not hitting the astronomical growth levels that they have done over the last 10-20 years. And the other underlying factor is lack of inflation, and that's, so 10 o'clock today we had European core price inflation coming in at 0.5%. That's as I've said many times before, that's where quantitative easing came from a fear of a deflationary spiral. So the fact we are very weak on inflation through all the main developed worlds, the US, Europe and the UK, and of course Asia, and especially Japan, which is where the deflation fear emanates from anyway, that's the sort of underlying, that's the sort of backdrop to what's happening in the markets. But in the meantime, we've got the CAD. We've had a good couple of weeks for the CAD because on the back of fundamentals. And here is an example. GDP is up from plus 0.5 from a previous month-on-month of minus 0.5. Minus 0.5%. So we'll have a look at some CAD pairs in a way. But yeah, I'm very focused on what the Chinese data is. And overnight tonight we've got Chinese manufacturing, so that's going to be big. Coming into the markets tomorrow, we can have a quick look at what that figure was for Chinese manufacturing, because that could overshadow the day. And by the time we come to our screens, we'll have had Aussie rates as well. And then for our European session, we've got pound manufacturing. So you can see there's a lot of data. The data spread right through to 3 o'clock UK time tomorrow. Wednesday we've got construction for the UK. The first of the jobs figures for the US. Services we're a service economy, so service data 9:30 Thursday will be important. And we've got European rates, but not UK rates. Is that right? For some reason, we've only got European rates on Thursday. A lot of gossip about potential some sort of easing fiscal change in Europe because of that deflation threat. So keep an eye on the euro as the week ticks by. And then non-farm payroll on Friday. So non-farm payroll is projected to be 196 jobs added, taking the unemployment rate down to 6.6. So we'll see. So a lot of data, and at the moment the markets aren't doing okay. So what I did today was on this Dow. I didn't trade this morning. So we opened up here, came down to that level there, and then ran up to 480. Came down to the open level again, ran up to 474, and then get up here. So it's nice measured steps. So I took some of that move up and then flipped it and took some of that move down, just to get some points in the bank. But it's Monday. Wasn't looking for big moves. Wasn't looking for this to run. Where are we? We are just getting into the last hour. But it looks healthy. I mean, this 60-minute chart is holding up. So the close above today, 470, is very significant. If we can hold 470 into the close, that bodes very, very well. If we put the fibs on that, let's put the fibs on the last move. Yeah, so we looked really weak on the 20th. That was last Monday, I think, wasn't it? No. Last Monday must have been the 21st. I've got a diary in front of me. I could look, couldn't I? Last Monday was the 17th.
Yeah.
No, it wasn't. Last Monday
24th.
was the 24th. Last Monday was the 24th. So last Monday we tested this blue line here, 16,200. Ran up, sold off, ran up, sold off. But it's looking good. Let's now flick to the daily. And we could, what's happened down here is not with the leg up that we came out of there, is very similar to this area here. So far not as high, but if we continue this level here, close above that 400, and it could be heading for 17,000. At which point we will be massively overbought, because if we drill down from the monthly, obviously this is the last day of the month. So hold up here, and that's a nice close to the month above the 127 extension. So all those bears who are calling for a sell-off, they could still be right.
Wrong again. Every time you hear the bears talking, the market bounces, doesn't it? Not even bounces, goes on a run.
Yeah.
I mean, the bears have been sort of Carters of this world, and Hubert and all of that. They've been saying, well, bonds are high, it's going to sell. and it just hasn't, has it?
It hasn't, but we are certainly on dodgy. I think the thing you've got to bear in mind is that a distribution pattern in a bull market can take a while to set up.
Yeah.
So if you look at this pattern here, we've got the makings of this of that up here. We just haven't completed it yet. So whereas that went to 14,200, we could just spike up. The 17,000 is not a massive mile away. And again, if you look at the RSI at that particular period, you could see it was extreme and very divergent. While so far
you've also got that monthly engulfing bar that you've got there. I mean, it does look pretty horrible, doesn't it? That.
You mean January?
Yeah.
Yeah, January was very shaky.
And it hasn't tested that yet.
And dragged us right down into this autumn 2013 level. But as long as we hold into tonight, I mean, any kind of topping tail on that, any close, we've still got an hour to go, and that's 460. If we close at 360, and suddenly you've got a topping tail, and you've closed at last month's close.
Yeah.
So we're in the sort of area where it's not going to take much to get some fear in that market and get the sellers in, as we saw in January.
Yeah.
If we now look at the weekly, I think well, at the moment we are, we're literally at last week's high, with a huge amount of resistance up there. So that's why that 470 is so crucial. If the daily starts to close nicely, then that bodes well for that one. But we're fairly lofty, and you can see why we've already experienced some selling because of that divergence. But we've got that sort of flute pattern kicking in.
Yeah, that's normally quite bad, that sort of pattern, isn't it?
Yes, it is, yeah. If you look at, you're basically sort of getting a bit of a squeeze, and so start seeing some weakness up there, and there's so much resistance up there. 550 is huge, it's massive. So it's going to need a big push to do that.
I feel more inclined to short it, to be honest.
Well, yeah. I mean, even if you look at the small time frames today, I think that's exactly what's happening. And we saw this, since January. We've seen a lot of this since January. The markets look nice and bright. They punch up nice and quick, only to see the highs sold. And Friday was a classic. Look at that 5-minute bar. I got stopped out of that for about 2 points. I stopped out of that by about 2 points before it ran.
What, you were looking to go long, were you?
I was long. Got in slightly too high. They whipped it down to 286, took me out, and then ran it up in no time.
That's bloody annoying.
I was trading in the room at the time. But yeah, I mean, look what happened. It topped out.
Double topped.
Double top. There's a little sort of a wedge breakdown, and they start getting short just after 3 o'clock UK time. Looks as if it's going to hold, and then they can just drag it right back down to the Euro session support.
Yeah.
So I mean, this at the moment, what happened on Friday is not too dissimilar from what is potentially happening here now.
Yeah.
At 470,
It's,
472,
it's,
has so far got sold. And there's the,
it's divergent on that RSI as well.
yeah,
Not
there's the
quite. I mean,
little,
it's actually lower lows, lower highs, and lower highs on the RSI as well.
yeah, you know, that's a fairly clear pattern so far. So,
Yeah.
so you know, the markets are jittery at these highs, very, very jittery. So if we now look at, let's switch to the euro yen, because this euro yen is quite interesting. Let's start the monthly again. So obviously we're very, very close to that bar closing now, and that's looking like you know, 2 blue months. Major resistance of 145.50. So at the moment, you know, back to Friday. I think it's Friday's breakout at 140.40. If we see that now, don't forget what I said about European deflation threats. We've got ECB rates this week, and lots and lots of chatter about ECB instigating some kind of easing, you know, printing more euros, etc., or something like that, or even a possible negative repo rate. So forcing people to get their cash out of bonds and deposit accounts. If they did that, this euro could roll over. So we will, you'd see people selling the euro if they did that, and going into stronger currencies potentially for the pound, which could make life awkward for the pound if the pound gets too strong. But what we need to watch that any kind of topping. Now drill down to the weekly. Okay, so that's strong. There's 2 blue bars in the monthly at the moment. And we had a holding pattern 2 weeks back, a hammer-like bar last week, and here we are on the back of the hammer trying to reach up to 143.25 again. There's the big picture in the weekly euro. Sitting above, you know, this 138.30 was a major resistance area. It's been major support. Then we have this fib support at 140.90. So if I tell you what, if the ECB leave the euro alone and don't make any changes, I think we'll see that break. I think we'll see that break up. There'll be a relief rally, and any short covering, which could take that above the 145. So that's a slightly difficult one at the moment until we get the ECB decision out of the way. We might find that quite sideways, but if we now drill down to the daily, if we're going to trade it, be guided by the daily. And the daily is holding this trend line, which 140 was the bottom test of it on Friday. And I did get 60-70 points out of that on Friday, but unfortunately I should have hung on. So that's now a pullback at 141.90 area, or ideally back to the better price will be 141.70 area if that closes up there, and that is above all the moving averages up there. We've tested a monthly R1 up there. So if this holds, this could break out. And there's the wedge. So that's the indecisiveness in the markets and the sort of almost hedging ahead of ECB. But the bottom line is, you know, all the time, if you're getting higher highs and particularly above all the moving averages, you know, that's a buy. You know, keep buying it until it stops working. Otherwise, if you try and factor in the fundamentals and try and factor in the data, you won't take any trades, and you might miss the big move. So on ECB, we're 3 days off the ECB decision anyway. So let's at least see if we can trade it into 143, 144 plus. To reflect on the pound yen, this has been, since this is typical of consolidation pattern. That was going to burst hard when we came out of this apex. It was either going to sell hard or buy hard, and they decided to buy it. That was either going to come down here, hit the 50 MA, and then drop hard, but they kept holding it, kept slowly bought the one, as you were saying earlier, slowly bought the 168, kept closing higher, bouncing off, holding the 50%, and then boom, a couple of days of good buying. So I keep buying it, and the Sunday Open is the obvious place to buy that tomorrow. So let's see if that is the case.
Yeah, I mean, the economic data out of Japan was shocking yesterday.
Right.
Last night, did you see?
No, let me.
In the morning, have a look at the. I think it was the economic output data or something like that.
Preliminary industrial production was very weak.
Yeah, that was it. Was that what it was? -2 or -2.5 or something.
Yeah. They revised it down. The last, I don't know what the previous one was. I revised from 4 to 3.8. They expected 3.6. We got -2.3. Yeah, that is terrible. Housing starts are very weak as well. I think the reason why the markets have held up and the yen stayed weak is because there was some favourable comments from the Chinese state saying they're prepared to invest in a huge amount of infrastructure to try and stimulate the economy again. So I think the market opened on the back of positive Eastern European news and Chinese news. It ignored what was happening in Japan, and they pushed it up. Yeah, so we've got more yen data overnight, and plus that Chinese data. Okay. Yeah, so I mean, sticking to the charts, just pound yen and euro yen are both buys, and CAD yen, that's hit that 200 EMA and come off. And look at that pattern down there. It took a few days to get going, March 13th. And look at it in the 60-minute chart, because I mean, big swing trades like that emanate. You can get in on them on the back of 60-minute charts. I mean, easily. In fact, if you're a day trader, that's the whole point of being a day trader, where you can have that advantage. So as soon as we broke up into 91.44, they kept retesting support at 91 until we nearly hit 94. If you look at the Aussie US, for this big move in the Aussie, you can, if you pan back from it, 89.25 was a big area. They just spiked it lower on February 28th, yanked it up, pulled it back to that same area, and then broke it out again. So how can you trade that? To a large extent, you can trade it just by watching the 60-minute RSI. That's a Sunday open. So on March the 2nd, they drag it lower, retest the 50 EMA, drag it lower again, retest Friday support, close it above the 50 EMA. So a good cluster pattern around there. And you're including a hammer on the 50 EMA. I mean, a hammer on the 50 EMA is a gift. And at 7 o'clock on the 4th, you get a hammer on the 50 EMA, they retest it, it doesn't really look back after that. Literally a few days after that, you get a move from 89.40 to 91.40. What do? They drag it right the way back down again, throw a hammer in on the 12th, and it runs up again. 60-minute charts are two hammers here. Second one breaches the first. There's your confirmation when we start closing above 90.50. Nice big round number. And they run it up. But if you look at what happened on Friday, this is where I took it. That's where I took my entry on the euro yen. You know, I just love nice big round numbers because I know the market. So within a sort of a plus or minus 25 normally, sometimes it can be more than that. So within that sort of parameter, the market loves them too. As it happens, they only drop it 3 points under 140, and if you held on, you've got 250 points, which I didn't hold on to, unfortunately. So big numbers. If you look at big numbers in the Dow, let me tidy this up. Tell you what, let's take everything off. Big numbers in the Dow. There's 16,000. So remember what I said, plus minus 25. Well, that was slightly more than 25. No, it wasn't. No, sorry, it was 22. 22 points under the 16,000. When they ran it to within 30 points of 16,400. But the first initial run was just above 16,250. So if we took the round 14,000 with a 20-point stop and got out at 16,250, you'd have made a nice 250 points. And here, this low here was just 10 points under 14,200. So look really weak here. Look if they're going to drop the pants off of it. Pushed it into the 50 and 200, dropped it back down to around 16,200. Started to hold this, and then yanked it up to resistance. But yeah, but round numbers. Let's look at another couple of the charts with just round numbers. Let's look at oil. Oil's been a really good market recently. 99. They dropped it 19 points under 99. So that's it again, within my 25-point range either side. What else? I mean, the lows, 97.50. I would call 97.50 a nice big round number, and they dragged that under 97.27, and then held 97.50. That's 97.50, and then dragged it up until we've touched 102. So you know, something as simple and uncomplicated as big round numbers. Well, let's have a look at what and the pound yen, the big number that this one came off was 171 today. So something as simple as big round numbers is sometimes all you need. Okay, so I like the M pair still. Looking to see overnight, just to sum up, looking to see if the Chinese data is going to support another leg up in the market. I mean, certainly this 60-minute Dow at the moment today is not looking to sell, unlike the previous week. So I'll be, if the Dow holds up here, I'll be looking for pullbacks and a gap fill. It's not to say you have to have a gap fill, but we'll see. Buying pullbacks in the pound yen and the euro yen, and that's about all for now. On the one, of course,
We haven't looked at pound dollar, Mike.
Pound dollar, okay. Now pound dollar had a big squirt today, isn't it? It looked really weak. We had a reversal bar, which worked for just 1 hour, and then they flipped it. Look at that nice reversal bar on the massive resistance. They dragged it down to just above. They dragged it 12 points above 166, and then shot it straight up again. So Friday support was held. That's a nice bull flag. Oops. Been a bit. I think this has been quite hard to trade. I actually went short here.
I was about to say that.
I went short here, thinking that we were going to just roll over. Took it off here because I could see this 200 EMA and 50 crossing and holding, and then we just charged up. Pullbacks were bought, and we're still seeing pullbacks bought now. Yeah, not easy to trade. I mean, again, if you're a day trader, you know, let's have a look at the 5-minute chart. I bet the 5-minute chart was easy enough. Well, certainly at 135, 140, you had extreme RSI, and you had a hammer at 140 UK time. Little dink back to 166.15, and we ran 70 points. Well, I said we didn't run 70 points, we moved 70 points. It's hardly running. It took, how long did it take? Well, to get to the highs, it took about 3.5, 4 hours. Hardly running. But nonetheless, you know, it refused to die. 60-minute chart.
You look at that hourly bar, and then it looks like they're about 4:30 or something.
What, today?
It was, yeah, sorry, it was on the 5-minute chart
Oh,
around
right.
4 o'clock. That would have been pretty difficult to sit through. Yeah, around 4 o'clock on your chart, might be 10 past or something. Yeah, that's it, look at that bar there.
Yeah.
Opened, came all the way down.
Yeah.
And then went all the way back up like that.
Oh,
and then
4
that was
o'clock.
choppy like heck.
Yeah, 4 o'clock is quite a key. 4:30 in forex markets is quite key, because that's when the big pension companies use 4 o'clock UK time to square off the books, and
Right,
4:30
okay.
of course is the FTSE close. That's why you get a lot of movement between 4 and 4:30 on currencies, particularly the pound.
I didn't know that.
Yeah.
Okay.
To be absolutely honest, the only reason I knew it is because of the LIBOR rate issue that was discussed at great length on the news, and they started talking about the significance of 4 o'clock in the context of that. Obviously, I knew 4:30 was a big key time, but yeah, you tend to see a lot of jumpy moves at 4 o'clock as the market makers square the books off. But But once, but
And it'd be just as the Yanks are going off for lunch as well.
yes, yeah. So yeah,
Well, not quite, not quite.
I actually have an alarm clock going off at 4 o'clock every day, which drives Claire crazy. Because it's such a key time, I have an alarm clock that shouts at me every day at 4 o'clock.
Hmm, that's interesting. I had no idea.
Yeah. Well, certainly 4:30 is major because of the FTSE.
What do you think about the Open and, sort of like foreign currency at like 8 o'clock in the morning? I think generally it doesn't happen every day, but it finds its direction at that point. It doesn't. If you find its direction in the first hour, go with it. There's something to be said for it.
Yeah.
Although in the UK you often get data at 9:30.
Yeah. What I like doing if I'm in the Euro session on forex, I like marking off the Asian highs and lows.
Yeah.
Before. So that's the Asian lows there, and that's the Asian highs. So you've got a range of 166.27 to 166.58. Now if you look at today's trading, pretty much we had a little blip underneath it and a slightly bigger blip above it. Otherwise, the bulk of the trading in the Euro session time was within the Asian range. So I think the Asian range. What I then tend to do once the Asian range, once we're out of, I use the Asian range for the Euro session, and then I use the Euro session range for
Really?
the US session. Because if you put this on, where are we? Yeah, you put the fibs on the Euro session range, which is quite tight. Look what's happened. I drag it down to 127 extension and drag it up to double the range. You see that?
Mm. Yeah.
And that's just by putting the fibs on the
Euro session.
Euro session.
Mm. Yeah, that's interesting.
So
very interesting.
So that makes that 166.14 more tradable to me. The fact they were respecting the fibs on the Euro session range made that range quite a good probability. If you look at the pound yen, let's do exactly the same on the pound yen now. So we had Asian highs and Asian lows. So we didn't even test the Asian lows. We tested Asian support here and Friday support. Broke out of the Asian highs just as the main Euro session was closing. Tested it as support late US session and then kept moving it. If you then put the fibs on the Euro session price action, which was there, you see they took it up. 127 was quite key, 161 was key, and then it was so strong. Later in the day, they broke it higher. And I mean that was probably more tradable than the Dow, really. If you look at the Dow, that's the overnight range. So in the Euro session they traded the overnight range, and then at literally they close it above that on the first 5-minute bar of the open. Very minor pullback, and then start running it. So that's a pretty buoyant chart. If you look at the Euro session fibs, I'm not sure if that will have any difference. Let's have a look. Now the Euro session was too narrow a range. Oh, no, hang on, look, the 127 extension, when they dragged it back for pullbacks, they were using the Euro session extension levels to buy it. So not bad. Okay, let me stop this recording.